Howdy, y'all. Welcome to Liberty Call. Today is Friday. Woo! It's the weekend. September 22nd, 2023. Hope everybody's having a fantastical day out there in the interwebs. Markets did not like today either. On what day was that? Wednesday? We had the bear sighting here at the DSA World Headquarters. And if you missed that, go back to Wednesday's video. And right at the beginning, I show the bear goes into the garage here at my house. And I just opened up the garage door for my wife because she was coming back from somewhere and didn't want to have to deal with her keys and stuff. Just wanted to run in and get back to her office because she had a meeting she was, tight on time for. And not more than 2 minutes after I had just sat back down and I get a notification on my phone that, a mid-sized black bear had wandered into the garage, and so I had to figure out a way to get him out. So grabbed some pots, beat on him until he wandered back out, and then chased him down the street. So the fun things you get to do when you live out in the mountains of Colorado. So no mountain lions yet. I've never seen one here. They're around. My neighbors take pictures of them all the time, but I've not seen one. Anyways. Market is as red as my shirt today. And if it's your first time watching Liberty Call, I am glad you are here. Yes, you right there in the purple shirt. If you could do me a favor, please give me some thumbs up, hit the like button, the subscribe button, all the follow buttons, depending upon what platform you're on, just do that. And press the notification bell so you know when I go live, because I have some of the smartest information. I steal it from the internet and present it here like I came up with this stuff. So anyways, let's go ahead and jump into the numbers. Dow Jones finished the day down 0.31%, 106 points. It was in the red most of the day, closed at 33,963. S&P 500 was down 0.23. It was in the green most of the day, closed at 4320. NASDAQ was flat, down 0.09, closed at 13,211. VIX fell 1.94% today. It's at 1720. Canada was down 0.06, so flat. Brazil was down 0.12, and Mexico was down 0.58. Over in Western Europe, Germany was flat, down 0.09. The UK also flat, up 0.07. France was down 0.4. Netherlands down 0.22. Spain down 0.49. Italy down 0.46. Switzerland down 0.63. And Portugal up 0.09. In Russia, both exchanges were green. MOEX up 0.99, RTSI up 1.2%. And overnight in Asia, the Nikkei in Japan was down 0.68, Australia up 0.05, New Zealand up 0.06. So those two were pretty flat for the day. The Shanghai was up 1.55, the Shenzhen Component up 1.97, China A50 up 2.09, DJ Shanghai up 1.63, Hang Seng up 2.6%. And the Taiwan weighted was down 0.61% for the day. All righty. So, not great. So let's go ahead and look and see how the markets did for the week. Starting out with the Dow Jones is going to finish the week off down 1.86%. The S&P 500 down about 2.83%. So the first one was, 1.86? Yeah, 186. This one's 2. The S&P 500 was 2.83. The NASDAQ Composite down 3.53%. Wow. Whew. And most of that was after Powell spoke on Wednesday. You can see that right there. The Dow Utilities, right there? Down 2.32, and the Dow Transports down 2.24. So yeah, it looks like the major indexes are down about 1 3/4 to 3 something right now this week. So not real good. So all right, let's zoom out to the big picture of the markets and zoom in a little bit. All right, so right here is the beginning of this downtrend last year on January 3rd or 4th. This is the Dow Jones, broke the trend, the downward trend in, October, November-ish time, fourth quarter last year. It's been trading sideways. We did have a little bit of a jump here on hopes that the Fed would, stop raising rates, which that, hasn't happened. And then we had this consolidation here. And it looks like if we zoom in real close, we can see we broke this upward trend line here on, what day was that? The 20th, so 2 days ago. All right, let's look at a very similar chart. The S&P 500 starts out at the same time, January of last year, breaks the trend. What was that? January of this year. Been on this upward trend for the for this period, and then we started a bit of a downtrend at the beginning of August, and it looks like we broke this trend again. If we zoom in real good on the 20th, also, so. It looks like if this holds to form, and again, zoom out, that breaking this trend, and if it continues this way for, I'd say, a week or two, that we probably are lining up for another downtrend in the market. Same, like I said, same thing with the Dow Jones, NASDAQ. I don't have any lines on this one. So, but again, it's, if we were to line this up, starting with there to there, you can see it breaks that downtrend or breaks the uptrend right there. So anyways, enough charting for today. If anyone wants some charting school, I'd probably recommend someone else because I understand it, but I don't teach it very well. So, all right. Let's go ahead and get into the economic numbers for today. Initial jobless claims came in at 201,000. Forecast was 225. Last week's number was 221. Continuing claims came in at 1.662 million. Forecast was 1.695. Last week's number was 1.683. So looks like we went down about 20,000. Housing starts came in at 1.283 million. The forecast was 1.44 million. Last month's number was a 1.447. So yeah, it is trending down. Month over month housing starts contracted by 11.3%. Last month's number was 2% growth. Existing home sales are selling at a rate as of this month of 4.04 units per year. The forecast is 4.1 units, and previous was 4.07. The month over month number shows a 0.7% contraction rate. Last month's number was a 2.2% contraction. So a little bit of an improvement there. All right, the U.S. leading economic indicators month over month grew at a 0.4%. Forecast was, a negative 0.4%. So it contracted by 0.4. Forecast was for a contraction of 0.5. Last month's number was a contraction of 0.3. So you can see we've been in the red going back to, that was May of 22. April was the last one we had positive numbers on. And the U.S. Manufacturing Purchasing Managers Index came in at a 48.9. Forecast was 48. Last month's number was 47.9. Pretty much anytime this number is below 50 shows a contraction. Above 50 shows growth. So we've been below 50 going back to, what month was that? That was November of last year. So pretty much almost a year of what people in the industry would look at that as a contracting number. I mean, we did have some growth here as up through the first part of the summer, but anyways, all right, let's get that off the screen. All right, let's get to the market recap for today. S&P 500 in wild swings as Fed officials talk need for higher interest rates. Yeah, I've been saying that for a long time. I mean, didn't I say that earlier in the week that, in my opinion, we probably needed to continue raising rates for the foreseeable future until inflation really starts to subside? I'd like to see some deflation. I mean, yeah, it'd be great. It's great if inflation comes back down to, between 0 and 2%. But what about the cumulative inflation we've had for the last 3 years? I mean, for most things, it's, 15, 20, 25%, depending upon the asset or good you're trying to purchase. So. All right. The S&P 500 faced a lack of clear direction as investors grappled with mixed signals on Friday. They were confronted with diminishing Treasury yields on one hand and comments from the Federal Reserve officials on the other, reinforcing the central bank's commitment to maintaining higher interest rates for an extended period. Federal Reserve officials continue to emphasize the potential necessity for further rate hikes given the persistently elevated inflation levels. Fed Governor Michelle Bowman expressed her view that it would be suitable not only to raise rates but also maintain them at restrictive levels for an extended period in order to bring inflation back to the central bank's 2% target. So there was talk before all this nonsense started 3 years ago. Basically during the teens, the 20 teens, that, well, we've had inflation. It's been below 2 for all these years. I mean, should we actually allow inflation to run a little hot, maybe 2 to 3 to 4% for a couple of years to, get that average, average it back out to 2? Well, now what we're seeing, what happens? It's just letting it go too far. And, granted, if you didn't print $5 trillion 3 summers ago, we probably wouldn't have all these problems. But, is what it is. Boston Fed President Susan Collins echoed this sentiment by stating that additional rate hikes are still a possibility. These remarks came just days after Federal Reserve decided not to implement a rate hike and also reduce the number of anticipated rate cuts from 4 to 2 next year. I would say, if the markets get really bad and they drop, 50% from where they're at today, I don't see it out of the realm of possibility that the Fed will buckle and, do the Fed pivot and, drop rates, print money, basically all the problems that were created from the '08 and then the last financial mess we had 3 years ago. So if it happens, it happens. Just, try to position yourself to take advantage of it. That's probably my best advice. Meanwhile, Apple's iPhone 15 was officially launched in 40 countries across the globe. There was optimism that the latest iPhone release will motivate many customers who had held on to their iPhone's models to upgrade. Preliminary data suggests that pre-orders for their iPhone 15 have exceeded expectations, indicating strong demand. Yeah, on Fox Business all day, they've had one of their, I forget her name, one of their reporters out at the probably their flagship store in Manhattan. And there's a line out the door, with people, the little like the lines at Six Flags that you have to wait through. To me, again, I'm a very cynical person. I'm like, well, how many of those people standing in line are just actors there just to, drum up business? And how many of them are actually people who are, wanting to buy a phone? Again, I'm a jaded person. Knowing what I know about the federal government, it doesn't take much. All right. Amazon.com made headlines by revealing its intention to introduce limited advertisements on its Prime Video streaming service starting next year. This move is seen as an effort to generate additional advertising revenue to offset the increasing costs associated with content production. Activision Blizzard experienced a notable surge in its stock price as it moved closer to finalizing its takeover by Microsoft. The UK indicated its willingness to accept concessions offered by Microsoft, paving the way for the acquisition to proceed. Again, why does any government have any real say in the matter? I personally don't know why. In labor negotiations with the UAW, Ford Motor Company made significant progress avoiding expanded strikes at its facilities. However, General Motors and Stellantis faced extended strikes as part of distribution centers for both companies went on strike. The UAW's president, Sean Fain, emphasized their determination to continue the strike until these companies return to the negotiating table with a substantial offer. I know I covered this the other day. Basically, my opinion is, you know what? These people don't want to work. Fire them all. I'm sure there's some young people who would love those jobs at whatever they're paying and would be happy. It's not like these people actually build cars. They just put them together like Lincoln Logs or Legos. So I'm sure any, 20-year-old brain dead kid who, finished high school and who can barely read or write could, put tires on a car. Come on. And not to say I'm some, bougie guy sitting here at a nice cushy desk. I fixed F-18s for a living for 4 years. I know what it's like to do hard labor. So, you're not going to get any sympathy from this guy. All right. Well, that's everything I had. Well, no, we have one more thing. We actually have a video here from the Malden Economics YouTube page. Let's go ahead and bring this up. It is titled End of an Era, Jacob Shapiro and Why Globalization Was a 30-Year Aberration. So we're going to listen to a couple of minutes of this, and then we'll be gone for the day. So let's go ahead and mute my mic.
So you never miss a new episode. Jacob, my friend, it's always good to see you. I've been thinking about this interview for a while now, and really what I want to get into with you is this idea of friendshoring, nearshoring, reshoring, basically bringing production back to the U.S. or to our friends. Because as you well know, right, we all, both the U.S. and the West in general, we woke up to the fact during COVID that we're highly dependent on some outside folks for really critical inputs to our economies. And we've even more recently learned that not all of those folks that we depend on are particularly friendly to us, and that trade can be weaponized. Mm-hmm. So I want to get into kind of how do you see this trend playing out? I spoke with Louis Gave a few weeks ago from GovCal. He calls it designification, just moving production out of China. But I think it's bigger than that, right? When you look at Ukraine and Russia conflict, you look at something as simple as uranium, or maybe not so simple, but uranium processing. Most of it happened in Russia. There's huge dependencies kind of all over the globe. How do you see this trend playing out? What are your thoughts on it?
Well, I'm going to dance around the question first before I answer it, because it's amazing what a difference just a couple of years of perspective makes, right? Because it goes from, oh, we're dependent on other countries for these different commodities or different inputs and things like that. A couple of years ago, we'd be saying, we get really cheap commodities and inputs from these other countries that we wouldn't have otherwise. That was the whole logic of globalization. But when you put a different veneer on it and you emphasize the security over the efficiency of free trade and globalization, then you get these sort of things. And I would also just say, as we start off, I find that nearshoring or friendshoring, just like, German deindustrialization, these are all big words that are actually much more complicated when you try to pull them apart. You can say nearshoring all you want. You just can't snap your fingers and the US-China supply chain is going to disentangle itself. They are so inextricably linked that the process of sort of taking them apart from each other, it's going to take years, if not decades, and there are going to be industries in which it's literally impossible. As for, Louis's point, I love Louis, and he's probably right, so you probably shouldn't listen to a thing I'm about to say, but I think it's a mistake to call it de-Sinification. Certainly that is an aspect of it. And you can see in countries like, for example, Japan, countries that are trying to have their cake and eat it too, the Japanese are incredibly dependent on the Chinese economy, and yet from a security perspective, completely dependent on the United States. So what are they doing? They're literally building two different supply chains. They're building a supply chain for China and then a supply chain for everywhere else in the world. So if you're from the Japanese perspective, yeah, that is sort of de-Sinification. But let's just look at a smattering of headlines right now. Let's talk about the Canada-India diplomatic spat that's happening. We can go into the details if you want. But one of the most important things that's coming out of that diplomatic spat is that India and Canada are suspending free trade negotiations. They've been making progress on them all year. You've got the European Union and the United States and Australia all batting their eyelashes at India because they want free trade with India, because if you're going to lose, a partner of China's magnitude, there's not a whole lot of options for you to replace them. So they're all looking at India. India's big economic policy for the Modi government, the translation is literally self-reliance. So they're imposing all of these protectionist measures, and they're trying to say, okay, well, if you give us this access, we'll give you this thing, and if you give us that access, we'll give us this thing. We could talk about the Mercosur European Union free trade agreement, which hasn't hafpened yet, which has been mired in disagreements between Brazil and primarily France, but not just France, about the Europeans want to make sure that every single thing that comes from Brazil has not touched Amazon deforestation. Brazil says you're just trying to protect your farmers. They argue back and forth. So, everywhere you look around the world, trade patterns are changing, and they are subject to geopolitical tensions, to security issues, to even just, straight, hey, we want to make this here because that's better for our economy, not because we have any highfalutin ideas about security and everything else. So it's really a varied trend. And I think the way to think about it in general is that countries have gone away from thinking about, okay, what is the cheapest, most efficient way I can make a product, to, okay, how do I protect my own companies, or how do I make my own supply chains more secure in case of conflict? And those were not things that countries were talking about. Even I would sort of date the beginning of this right back to 2014. That was when Obama was still president of the United States, and there was this little tiny mini trade war where I believe it was tire manufacturers in the United States were upset that China was dumping tires into the U.S. market. And so the United States the United States put tariffs on tires with the same mechanisms that Trump did his whole trade war. The Chinese turned around and put sanctions or tariffs on U.S. chicken products. So it was sort of the poultry tire trade war. And the moral of the story was not that China or the United States got what they want. It was that Vietnam started making a lot of the world's tires, which is a good way of sort of summing up the dynamics that we're talking about here.
Circling.
All right, we'll go ahead and stop that there. Some interesting stuff. That video is linked in the show notes page. So if you want to watch that in its entirety, it's about 40 minutes long. If you listen at normal speed, that was at 1 1/4. And Mr. DiAgostino always has good guests and good topics to cover. So if you have a chance, give it a listen, and talk about globalization and protectionism and all the things involved in what he sees the future of that. So, all right, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. I hope you have a wonderful weekend, and I'll talk to you next time.